credit score, right? So anything above probably a 750 to 850 is a good score. Your credit report has to be 100% accurate. That's the law. That's a Fair Credit Reporting Act. It has to be timely and accurate. The fact is the banks have to pay to report your credit to the credit bureaus. So if you're not paying a little bit of interest as a business for the banks, they may not report your line of credit.
Hello, and welcome to another episode of Global Achievers. In today's episode, we have Patrick Manning. He's the owner and CEO of Veteran Credit Repair Services. And today he's going to be talking about how to achieve an excellent credit score. And if your credit score isn't that great, then no worries. We're going to be talking about how to repair it as well. So stick around, we'll be right back. Hello, and welcome back. We have Patrick joining us from Kansas. Patrick, how are you today?
What's going on, Tariq? How are you? I'm excited to be here.
Same here, man. This is going to be an excellent episode. I know there's going to be a lot of very valuable information for everyone. So the way I usually get started is just going back a little bit. So for yourself, let's go back when you got out of the military and just take it from there.
Yeah, so I retired in 2012. Well, first of all, I appreciate you having me here. I can't explain the gratitude I have for taking the time and hear my story and to help out your listeners and to help my business out a little bit. So I retired from the Army in 2012. I was a correctional specialist in the Army. And we moved to North Carolina. We wanted to try to start our civilian life in North Carolina. And we were here in Kansas for an extended period of time for about 10 years of my career. So when we went to North Carolina, it just didn't work out. Right. So we moved back to Kansas about a year later in 2013. And we had a young family when we moved. And it was really a struggle as far as, setting up that last month's rent, utility deposits, all the other expenses that come with moving that everybody's familiar with. So really, I made a deliberate decision to default on 3 credit cards, and I withheld 2 payments of my house, of my mortgage. I had a rental home that we lived in before we left, and I had, because of the market at the time, I was just renting it out. So I did what I had to do for a young family. We had 2 young daughters. I had to do what I had to do. And who wins, family or the banks? So that was a tough decision to make, but I had to. So I defaulted on my credit cards and figured out I had to fix them. So I paid a little bit of money for some other companies to try to fix it. They didn't do much. They really just took my money from me, and I had to figure it out on my own.
Okay. And is that when you got the sort of inspiration to start your own credit repair services company?
Oh, definitely. So yeah, I was paying somebody else. I was talking to my friends about my struggles and so forth. And my friends were like, you can do this on your own. You don't have to pay anybody to do this. And it's a fact, you can. So I researched it. I did a lot of reading, a lot of buying of programs and stuff like that. I had to figure it out for my family, because I knew that I settled all of my debt. I paid everything up, but I still had all that back history that was negative, just hanging over my head constantly.
Okay. So which year did you get started?
Oh, let's see. So I came back in 2013. So probably about 2014 is when I fixed mine. And then once I was able to get my credit cleaned up and get all that negative stuff removed, I was basically talking with some other friends about how it went, and they asked me to help them. So I kind of started helping them about 2015 or so.
Mm-hmm. Okay, perfect. So for the last 7+ years you've been in the business, what are some of the services that you provide?
So basically I provide what the federal law allows. Okay, so the federal laws, the Fair Credit Reporting Act specifically, allows that any consumer can dispute items on their credit report. That's just a law. For 20 years in the military, that's all I did is follow rules. And that's one of the rules, right? For consumers. So the services are really pulling your credit report, analyzing it, having that experience, having the letters to write out, being able to edit those letters, sending them out, tracking them, and getting the responses back and doing it all over again, rinse and repeat for round 2, 3, 4, 5, 6, or 7. So it's a twofold process, though. It's one thing to remove negative items in your credit report, but you have to replace it with good stuff. So a lot of times when people try to fix their credit report, they always take the negative stuff off, which is part of it, but they also lose that history, which is also part of your score. So then their scores go down instead of going up. So they have to replace it with the positive things. So I've got different companies and partners that I work with to find ways and creative ways to add positive stuff to their reports as well.
Okay, excellent. So we are going to dive a little deep into this, because I think this is going to be very educational for anyone, actually, not just business owners, but anybody. Because, let's face it, in North America, we need a good credit score, whether it's borrowing money for, your car loans, your mortgage, whatever it may be, and on the commercial side as well for people looking for business credit and such. So one of the first things that I would want to know from you is that what actually constitutes a credit report?
Okay, so I want to go back just on one thing. So you mentioned a car loan or your mortgage, but your credit history can also impact a rental home, an apartment that you rent. It can also impact a job. So if somebody is not good with their money, are they going to be good with a company's money?
You are 100% correct. Yes.
So it impacts a lot of things. So what comes up of a credit report? So your credit report first starts off with your personal information. It should have your proper name, middle name, social security number, your birth date, your address, and maybe 1 or 2 previous addresses, and then your current employer as well. So that's kind of like the top section, right? That's all your personal information. And to caveat real quick, or to add to, I guess, your credit report has to be 100% accurate. That's the law. That's a Fair Credit Reporting Act. It has to be timely and accurate. So if things aren't accurate, then that's what you're disputing. So going on down in your credit report, I don't have one in front of me, but off the top of my head, next would be like your public record. So if something happens through the courts, that's financial stuff, that might be on there. There'd be a bankruptcy, that could be child support, a garnishment or something to that effect going through the courts as a public record. And then you generally has a list of all of your creditors, all of your lines of credit. You will have your bank, it'll have all the information of each line of credit. When you open it, your highest balance, your credit score, all of that stuff to include your payment history. And then at the end, it'll have maybe a list of inquiries, people that were accessing your credit, and then a list of the creditors' addresses and so forth that are also be on your credit report.
Okay, excellent. So what are some of the components which go into calculating a score?
So I have my little cheat sheet because I can't remember all these numbers either, to be honest with you. And I always refer to it. So there's 5 different areas that comprise of your credit score. And there are probably 10 or 15 different models of credit scores as well. So a lot of people that use Credit Karma, Credit Sesame, some of the other credit monitoring companies, whether they're free or you pay for, they use an Advantage score. It's a very basic credit score that the credit bureaus kind of came up with and agreed upon. But there's a ton of FICO scores. And the FICO scores are really what's used by the banks for lending money for mortgages and cars and stuff like that. So they use some version of that. So what I'm getting ready to say, it may not be the exact amount, but it gives your listeners a broad understanding of what comes up with your credit score. So basically there's 5 different areas. And the first one is your length of credit history. So about 15% of your credit score is your credit history. How long have you had credit? So typically that starts off young adult, 18, 21 years old or so forth. But to be honest with you, that can start off much earlier, depending on the parents. They can start that credit with their child when they're a child. And that starts off their credit. About 10% is your new credit, and that's the inquiries. All right, that's having everybody look at your credit score and having new credit. A good credit mix, about 10% is a good credit mix with revolving credit, major credit cards, store credit cards, gas station credit cards, but also installment loans as far as a mortgage or an automobile or vehicle. So a good mix of your use of your credit. About 30% is the credit owed. So how much you owe your creditors is about 30% of your score. So if you say your max credit is just $10,000, just for easy math. If you owe $8,000, that's a high credit utilization, but if you only owe $2,000 to $3,000, that's only 20 to 30% of your credit utilization, and that's good. You want to keep your credit utilization low. That means you're responsible with your credit. You can use it, you can pay it off, and you got a low credit utilization. And then about 35% is the last area, is your payment history. So no late fees, no charge-offs, no collections, no bankruptcy, late charges, rather, not late fees, late charges and stuff like that is your payment history. So those 5 different areas.
Okay, excellent. So the next thing is going to be 2 parts. The first part is talking about people who have been sort of careless, maybe in their younger lives or whatever it may be, and suddenly now when they're applying for that nice new apartment for rental, or they're applying for a car loan or a mortgage, suddenly their credit score is now in the focus. It's very important. So 2 things I would want to know. The first is that how does one go about repairing their credit? That's the first part. Okay. The second part would be, we have a lot of newcomers, immigrants who just come into the country. Most of them come in from a financial system or a banking system where they're not really privy to what credit score is, or they never needed it. They probably dealt with cash in their own country, right? So how does one go about building up their credit? So I guess I will start with the first thing, is to ask you, how does one go about repairing their credit?
Okay, that's a great question. I have not worked with I guess the best way is new immigrants. I've never done that. But somebody that's just starting off, I can get that. So repairing your credit, those negative things on your report, that, like I said before, the Fair Credit Reporting Act has to be reported 100% accurate. So the first thing somebody has to do whenever they're trying to fix a problem is know where they're at. So they have to get their credit report. They can sign up for a credit monitoring service. Like I said, the free ones out there, Credit Karma, Credit Sesame. I think there's another one I can't think off the top of my head. But you get what you pay for. It's free. Okay. The best thing to do is pay for a credit monitoring service. There's a bunch of them that are out there. I'm not necessarily affiliated with a lot of them, but they can research it, or they can contact me later and I can help them out. Okay, but there's all kinds of them out there that pull your credit report, and it's called a soft pull, so it doesn't impact your score. So you have to know where you start. You have to analyze your credit score and your credit report and determine what is negative on there. So you have to know what it is. From there, you determine what do you recognize. Compare them on all 3. What is right? What is not being reported properly? If the open date is different on all 3 credit reports, well, then that's not accurate somewhere. If your current balance isn't being reported accurately on all 3, then that's not correct somewhere. So it's not accurate. It has to be 100% accurate. And then basically a consumer just disputes it. They send a letter to the credit bureaus and they dispute it. They write a little letter up. Obviously, I've got tons of them for different situations and different scenarios. But they just tell them, hey, this is reporting wrong. I'm asking you to investigate it. And in accordance with the Fair Credit Reporting Act, they've got 30 days to do an investigation and either validate it or remove it. Validate it, fix it, or remove it. So if they contact the creditors and they fix the information, then it's fixed. If they can't fix it, then they have to remove it.
Okay, got it. So,
Let's go back to the immigrant part. So let's take that back just to a new person, an 18-year-old, you have to start somewhere. So I would probably suggest a small line of credit, a small credit card for somebody. Most likely, I would assume the banks in the U.S. require a social security number. I'm not exactly sure how that works, to be honest with you. But they would just apply for a small, $1,000 or $2,000 credit card and start building that line of credit and using that line of credit responsibly. They can, use it for gas, let it go for a month or so, and then pay it off. A lot of people argue about letting it. I always recommend to let it ride for a month, if you'd say a balance. A lot of people really don't agree with that, but the fact is the banks have to pay to report your credit to the credit bureaus. So if you're not paying a little bit of interest as a business for the banks, they may not report your line of credit. So it makes sense just to pay a little bit of interest. Like I say, let it ride for a month. And then you can pay it off. So you paid a little bit of an interest. I'm not saying go out and refurnish your home and pay that in 6 months or whatever, because you're accruing all that interest. But being responsible with your credit. There's also some programs out there that you can have your rent reported as a line of credit as well. You can get secured loans and secure lines of credit. Putting $100, $200, $250 into a bank, and then they give you a credit card, and your limit is $100, $200, or $250. But you got to be responsible with that small amount of credit.
Okay, so just to clarify on one of the things you said, when you said let it ride, what you mean is that if there's $100 owing, I pay the minimum, which is, let's say, $10,
Correct.
And I accrue interest on the $90. Obviously annualized interest, and next month I pay off $91, let's say.
Correct. Exactly. Not you got to make a payment. If not, you're going to be late. So you get that statement in, you make your little 1% or whatever payment they want, and then you're right. Let it ride. Let it go over another month. Get a little bit of interest in there, and then just pay it off.
Okay, perfect. One of the other things you said is the soft pull. So I'm assuming that there's also a hard pull as well, right?
Correct.
Could you explain the differences?
Sure. So a soft pull is pulling your own credit report. That means it doesn't go on your credit report as an inquiry. It doesn't affect your credit score at all. Some lenders actually say they do a soft pull. But basically, if somebody accesses your credit report, your car dealership, a line of credit that you're applying for, obviously a mortgage, something to that effect, that would be considered a hard pull, and it would be listed on your credit report for 2 years.
Understood. And is that also maybe a reason why your credit score may go down a little bit?
Yes.
Or does it stay the same?
No, it's going to go down with those hard credits, because that's that 10% of credit mix, or I'm sorry, 10% of the new credit. So having a lot of inquiries, or as we're talking hard pulls, that is going to impact your score. What it's basically, it tells the bank sometimes that you're credit desperate. So you may not be managing your money very well. Maybe you got laid off. So, you're not able to pay too much for grocery or whatever. And you're like, hey, I need to get a credit card. I need to pay this stuff on credit. And you're living on credit. So it gives the impression that you're credit desperate. So that's how that impacts.
Okay, got it. So speaking of, and I want to go back just a little bit about one of the things you said, was that if there are any disputes on my credit score, I can write to the reporting bureau, which could be Equifax, let's say, or TransUnion, one of those, right? So this is something which a consumer can do by themselves, correct?
Correct. Yes.
Correct. So
yeah, they can.
So a service such as yours, where would you say that you sort of add the value for the consumer?
That's a great question. So I'm always honest with my clients that they really can do this themselves. I figured out, basically, I did pay money for different programs and got different letters and to better understand it, watched a lot of videos and so forth, but they can. And to be honest with you, you can go on YouTube and figure it out. You can go on YouTube and figure out how to cut your own hair, how to change your own oil, and you can actually go on YouTube and figure out how to file your taxes. But people don't do that because either they don't have time, they don't have the trust in themselves to know how to do it. For the lack of better words, they don't want to goof it up. So the value of having me do it for them would be the experience that I have, would be the software that I've invested into to track everything, and all the letters and so forth in order to properly write that, edit it, print it out, send it out, and all they do is sit back and wait.
Okay, perfect. So as a potential customer, how would one go about evaluating a credit repair service?
So there, like I said at the beginning, I talked about a lot about the Fair Credit Reporting Act, right? So basically that, the U.S. government comes up with fancy words to name things, right? Fair credit reporting. So has to be, your credit report has to be fair, right? Anyway, so the next one is the Fair Debt Collection Practices Act, right? So collecting debt fairly, right? That's where they can't call you in the middle of the night. They can't threaten you for things. They can't call your employer and stuff like that. That's the third party collectors. And then there's another law that a lot of people don't know about, and that's called the Credit Repair Organizations Act. And that is the law that governs our industry. Okay. And we kind of refer to it as CROA, C-R-O-A. And within CROA, there are very specific prohibited activities that a credit repair organization cannot do. And there's two that I always tell my clients about. And one is, I cannot collect funds before I provide a service. I cannot collect any money from you before I provide you a service. There's a lot of companies out there that will charge $100, $200, $500, $700 up front, and that's illegal, period. I have to provide something to you, and then I can collect the funds for that service. And the other biggest thing is unrealistic expectations. I cannot give you unrealistic expectations. I cannot tell you that I'm going to raise your score in 30 days, in 60 days. I can't tell you I'm going to get to 700. There was recently a individual that was charged in, I think it's Harris County, Texas. I know it was Texas. And she defrauded the creditors of $3.3 million, I think it was, because she was creating false, allegedly rather, according to the news article I read, she has allegedly created false police reports on identity theft and submitting those things to the credit bureaus and erasing all of that debt. So to evaluate a credit repair organization is, if they tell you anything about paying up front, they're violating the law. Okay. And the reason I say that is because they're not running ethically. All right. If they tell you anything, I can get your score raised in 60 days. I guarantee you I can get that removed. I guarantee you XYZ. They're violating the law. They're not running their business ethically. So there's a lot of them out there. Some out there. I don't know about a lot, I guess, but there's bad apples in every industry. And unfortunately, we have some in our industry. And I'm actually working with a couple of my clients to consider legal action on those companies as well.
Okay, got it. So one of the other things which I think a lot of people would be curious to know is, who do you think should pursue a business in this space?
I'll tell you, anybody that has the self-drive can it's a small business. My background's blurred, but you can see I'm working from home. You saw that wasn't a ghost earlier. That was my daughter walking in on me. So working from home, has the drive to run a business properly, has the ability to research, stay engaged with your clients. It's really not a hard gig. It's a great side hustle. It can turn into a very lucrative business depending on how somebody wants to run it and scale it. There's different support groups out there. There's different websites that you can sign up with for mentorship or things like that.
Okay, excellent. And in terms of certification, or the investment which is required initially, what are some of the things that one would need to do before they can start a business?
That's a great question. So this particular business, the way that I'm running it, is called bootstrapping. It's very little down payment. I've got my computer, a little bit of software that I invested in, and it's not very expensive to get started at all. A couple $100 max. As far as certification and licensing, each state is different. My state in Kansas does not require a certification or a license or bonding. The state actually defaults to the Federal Credit Repair Organizations Act we just talked about. But there are some states that are very strict. They require licensing, they require bonds, they require a lot of things. So you have to research in each individual state to determine what you're allowed to do.
Okay, got it. So as we're winding down, I think one of the key questions, and I'm gonna kind of put you on the spot here and ask, is that what is a good credit score?
Good credit score max is 850. That is the max credit score, right? So anything above probably a 750 to 850 is a good score. Okay, you can get an 850. Okay, so you have to have 30 years of credit history. You have to have little to no inquiries. You have to have a great mix. Remember all those percentages I gave you, all those things, they all have to be top notch. You have to have a great mix of your credit, great mix of your credits. You have to have a couple of those, revolving credits, installment loans, things like that. You have to have very low money that you owe, well below even the 20 or 30% that we were recommending, right? So it can be done, but you're not getting it at 18 because you don't have 30 years of history, right? So what's that, 50, 55 or so before you can really have 30 years of credit history.
Okay, good to know. Excellent. Well, we can all strive towards that. I can let you know in I don't know, a decade or so if I'm getting there. And we can go from there. Okay, perfect. So Patrick, you have a special offer for anyone who's going to be watching this, our audience. So yeah, and audience, this is an excellent offer for anyone who needs services. So Patrick, please go ahead and let us know what it is.
Well, I appreciate once again the time coming on. I know we're winding down a little bit, and I can't thank you enough for the opportunity to talk to your listeners and to also help your listeners and really to help me out a little bit here and there as well. I'm going to read off my little cheat sheet, make sure I don't say anything wrong on this. But this offer is going to be for 3 months after you air the podcast. So whatever that date is that you aired it, it's going to be for 3 months. Okay. So for the first 3 months, the first 2 listeners per month, okay, that visit my website and enter their information to a free consultation, under the Sign Up Now tab, I'll provide my services free for 3 months. And the only thing that they would have to pay for is going to be the credit monitoring service, because I can't pay that for them. All right. And that can range from $20 to $30 or so. Okay. Here's what they have to do. They have to go to my website, which is Veteran, it's singular, Veteran Credit Repair Services, plural. So veterancreditrepairservices.com. And it's under the tab that says Sign Up Now. There's a little form there. And in the listener's middle name, I want them to put your podcast name. So, for example, it would be Patrick S. Factor Manning. Right?
Perfect. Yeah.
So, Veteran Credit Repair Services, the Sign Up Now tab, fill out the form, put your podcast as the middle name. The first 2 people of each month for the first 3 months that you publish the podcast will get 3 months free.
Right.
Perfect.
And
the value is $100 per month. So each person would save about $300.
Yep. And that is a fantastic offer. That absolutely is. All that information, including Patrick's website, will be listed in the description below. So you can just click on it, head over there, and just follow the instructions. That's all you need to do. Patrick, thank you so much for your time. I really appreciate that you have added so much value to our audience, and I wish you all the best with your business.
And I thank you once again for having me on, and I thank you for your audience listening. I can't wait to help your people out.
Thanks for watching. We really appreciate that. If you like what you saw, then give us a like. It really helps with YouTube's algorithm. If there's a type of professional that you want featured on a future episode, then let us know in the comment box below. And if you enjoyed the content, then subscribe to the channel. Thanks again, and we'll see you on the next one.